Welcome to the Commercial Real Estate Podcast powered by First National, recording live here at the Land and Development Conference in Toronto. I am Aaron. He is Adam. Our guest today, a very special guest. Adam and I are very excited about this. It's a topic that we are deeply familiar with. And we've had guests on from CMHC before, but really more geared towards a specific topic. Our guest today is Nadine Leblanc, who is the Senior Vice President of Housing Policy and Programs. And the reason we're so excited is because that gives us, Nadine has the experience and the history of CMHC to give us an opportunity to basically ask whatever we want.
A peek behind the curtain.
Yeah, and usually, usually when Adam and I are setting these up, we say, hey, what do you not want us to talk about? And often guests go, I can't talk about this, I can't talk about that, don't ask me about this. And Nadine went, whatever you want. Yeah. And which is very sort of counterintuitive considering that she works for the federal government. You would have thought she said, only ask me these 4 questions and that's it. So watch, we're going to get into this. Nadine's going to go, I can't answer that, can't talk about that. Anyway, we'll get there. First and foremost, Nadine, thanks for joining us.
Absolutely. Thanks for having me.
We always like to start with just the history. So how long have you been at CMHC? What's your background?
Yeah, good question. So I've been at CMHC for almost 20 years. And actually, I started with CMHC as being the external auditor of the financial statements and audited them probably for 5 years. And then after a while, they're like,
audited CMHC financial statements.
Audited CMHC's financial statements.
Would that include like risk management? Is that
risk,
cool?
yeah. Okay. And so right before the crisis, a couple of years before the crisis. And then they're like, you know too much about CMHC. You have to come in.
Yeah, we have to kill you. Yeah.
And so I started my way in finance and was mainly the implementer of some of the crisis programs in 08, IMP, as you probably are aware of, the insurance mortgage purchase program, and then some of the stimulus that came after the financial crisis. And basically had many roles at CMHC since. All the chiefs role. Chief Audit Officer, Chief Financial Officer, Chief Risk Officer during the mainly the pandemic.
Must have been easy.
Yeah, it was interesting times, and then made my way into the commercial space, multi-unit underwriting, and now into policy. So working with the federal government and trying to come up with some ideas and some solutions around the housing crisis. And most recently, we merged our policy department with our housing programs. There's a lot of synergies there, making sure that when we design some of the solutions, we see it through implementation. And if it's not working, how do we make it better? And so that feedback loop, extremely important. And so, over 20 years at CMHC and love the mandate. And so been learning ever since the first day.
It's a very important mandate. We're going to talk about the history of CMHC. Yes. Then we're going to talk about some of the sort of more specific MLI, multi-lender, multi-unit lender, insurance program policies. We'll talk a little bit about ACLP because that falls under you right now. And then I think at the end, I know we didn't set this up, but let's just do a quick roundtable about housing solutions and what we think are potential opportunities or ways that we can keep building, in the current environment. So let's start with the history of CMHC. We thought it's an opportunity to give our listeners just a quick background. I will set this up as much as I know that CMHC started post-World War II to help encourage banks to lend money to war vets to buy their houses. And it started kind of innocently and has grown to the behemoth. What else can I add?
It's not innocent.
Yeah, so that was 1945, and then now we're today. What happened in between?
Yeah, well, so many things happened, right? Like you're right. We were first created post-war, and you're right. We were helping the financial institutions to really step up to finance home ownership at the time, and also rental. But we were also, people forget that we were the federal developer as well. So we were building actually housing, and we were building housing, and we were doing a lot of innovative work. So figuring out, demos, innovation to construction techniques. So I'm saying all of this because these things will come back later. And we were created essentially with a quite enabling legislation. So CMHC, if you look at post-war, we did develop housing, we did support the housing finance market, but we also did some really interesting infrastructure financing. So sewage, and we did some of the public infrastructure. So anything tied to either indirect or direct housing, from acquisition to repairs to new. And that was really important because you can't get housing with everything that goes around it, right? Infrastructure. And so post-war, we built, we developed, and then we kind of stimulated the financial markets. Then after that, the federal government started investing into social housing. And we were front and center in building that stock that we know today. You know, we reference the 4% all the time. OCD, we're 4% social housing in Canada. We're one of the lowest. Well, that 4% is coming from that stock that we built in the 70s. And we invested almost, it was $2 billion. $2 billion a year we were investing in social housing. This will become important because in 70s, the government was invested $2 billion in social housing. I'll reference the $2 billion again maybe later as we talk about.
That's $2 billion in 1970s dollars.
Exactly, right? Like that's the important piece. And then so we were kind of the funder, the investor, and we were de-risking. I'm going to use that word a whole lot in our podcast. De-risking kind of the construction and financing market at the time. And then we did that for probably like 10 to 20 years, and came about like the 1990s. And the federal government decided to divest its responsibilities to the provinces. I don't know if you recall that, but anyways, big movement inside of CMHC, kind of bundling some of our programs and putting that in the responsibilities in the hands of the provinces. The investment stayed there, I have to say, but it was transferred in the hands of the provinces. They had other tools that they were combining to really enhance social housing. And so we came out, federal government kind of decided to no longer invest in social housing. And we put that in the hands of provincial and territories' responsibility. And at the time, in the 1990s, we really became the insurance company as we know it today. So in the 70s, we were more lending. We were providing a delta subsidy to the banks in order to do conventional lending for homeownership. In the 90s,
like a direct subsidy.
A direct subsidy. Okay, you're right. And then in the 90s, we converted that to a premium and therefore an insurance. And we were the only game in town on home ownership, I'm going to say. And we did like, it started off like, of course, we had 100% of the market. And not too long after that, the government changed the regulation to intensify competition. And so it came about some competition with us in the market to offer home ownership insurance to the financial institutions. 1990s, of course, another financial kind of crisis. We were it again, and that's probably the ebb and flows of CMHC. We are always here during a housing crisis, and we'll come back to the housing crisis in a second. But 1990s, we were creating a lot of stimulus programs. We were all on board with the insurance, really trying to get that market to build more housing. And then competitors came about, so we started to share that market with others, and we were still not in the game of social housing. So the government had stopped financing. It was really with the provinces. So our focus was mainly on the commercial side. We always had this kind of business around mortgage loan insurance rental, but that was not kind of what we were building at the time. Purpose built was not kind of the housing type that we were building. So it was a very tiny part of our company. And then, fast forward to the financial crisis. So we were sharing the market share, and then boom, when the crisis hit, back into CMHC's balance sheet, right? And you'll see that through CMHC's history. We're using our balance sheet, our assets, how we mobilize the industry to really support a crisis. So we kind of attract capital, liquidity, making sure that during a crisis that liquidity keeps on moving for home ownership, but also for purpose-built rental. And so in 2008, we did a lot of programming, like talk about with municipalities, with provinces, both on the housing program side, both on the commercial side. And that's where we saw the introduction of the Insured Mortgage Purchase Program with the Bank of Canada, IMP, we call it, with a securitization program. And so that kind of lasted until the pandemic. And the pandemic hit, and we created some new programs there too. We even entered, just to show how enabling our legislation is, we even created a program with the government, of course, to support landlords during the pandemic. And so that really supported kind of the tenants through the hardship that we saw during the pandemic, and we supported the government with the Rapid Housing Initiative, which created a lot of housing for shelters, transitional housing, which is super important as we saw homelessness increase during the pandemic. So we were there for that. And here we are in the midst of this housing crisis, and CMHC, I will say, remains a critical partner to solve for this crisis. And I will say that our biggest role right now is around financing. So either creating, attracting, providing capital in order to stimulate supply. And I'll say all kinds of supply, from shelters all the way up to home ownership. And that's who we are today. But as you can tell from the history, we kind of, we were all over the place depending on the needs of the country.
A Swiss Army knife over the last couple of decades. Of the three downturns you mentioned, global financial crisis, the early 90s, and then the pandemic, in terms of actual claims and payouts, I imagine the early 90s probably would have been the most significant of those, given that the other two crises, I mean, were bad in their own way, but it didn't actually result in people defaulting their mortgages.
Yeah, I think you're right that the 1990s was probably the cliff of mortgage default that we saw in Canada. And you're raising a good point, right? Like when CMHC is here in crisis, we're here for home ownership. Like that's why we exist. So we try to protect lenders, but also consumers as we kind of go through hardship, making sure that we can support them in keeping their homes. And so, yeah, 1990s were kind of the days where we saw a lot more claims and defaults in our books. I'd say with the more recent crisis, Canada has been very resilient, and in part that's like government coming in with some programs, CMHC stepping in with deferral payment programs, but also just the way that the financial industry is constructed in Canada with all the regulations, and OSFI supervising, the financial industry really helps with the resiliency of mortgage default in Canada. So that's really helping. I failed to say, like, we when we saw the interest rate coming up following the pandemic, this is where I think CMHC became super crucial with coming out with low cost financing and programs to support what was coming with the cost of construction because of the interest rate. And that's where you saw MLI Flex. You mentioned MLI Flex. So Flex was a tiny part of our business, rent on the rental side, mortgage and insurance on the rental side. And when we saw those interest rates coming up, we saw a huge shift on the rental side, and those programs just picking up. And that we created that apartment construction loan program.
Flex,
as well.
Flex was a program where if you offer some affordability as a social outcome, the CMHC will offer some attributes to the construction loans to incentivize the affordability, and you had to maintain the affordability for 10 years, right?
Yeah.
Very similar. It was the precursor of the MLI Select program.
Exactly.
Yeah.
You got it.
Well, it was amazing. The launch of MLI Select took place in March of 2022, which is also exactly when the bonds took off. The timing was down to a matter of days apart. So that was very well timed in an industry where it's hard to time things like that.
Yeah, so MLI Select was kind of picking up because of that. Like we were ready to go, and then the apartment construction loan program, where what we were seeing.
The RCFI, now known as the ACLP.
Exactly,
yeah.
we like to rebrand here, and so we were seeing conventional kind of starting moving away from the space for all the reasons of the economic reasons, and then CMHC stepping in, being innovative as we are. To with those new programs, and I could tell you that it really made a difference in making sure that the supply continued during that time.
There's I mean, as you tell the history, and thanks for that, Nadine. It was very interesting. A lot of things I didn't know. CMHC has never been a huge part of the apartment market. And let's focus back into commercial, since we're sitting here at Land and Development Conference. I remember starting my career right at the world financial crisis, and I don't know exactly the proportion, but I'm guessing you guys were 40% of the market as far as, just total apartment lending, sort of apartment financing. You might have had 40% of the program. Because I remember talking to clients every time a deal would come in and we were underwriting and looking at financing it. It was always a debate whether I go conventionally or whether I do insurance. And the insurance had, a cheaper interest rate, but there was a premium, and the leverages were no different. In fact, the amortization was no different. It was perceived anyway that the underwriting was more challenging, a little bit more complex, and it took a lot longer. So there were lots of
the cap rate complaints.
Yeah, there were cap rates. It wasn't market cap rates. Yeah, the cap rates might have been 6%, and CMHC was using a 7%, and et cetera, et cetera, et cetera. So there was always this negotiation about, an internal discussion at all of our clients. Fast forward to today. I don't know what the number is, but it's north of 95% of the market, right? Like you've taken over and dominated. And part of that, let's be transparent. Without the MLI Select program and the attributes to incentivize development with 50-year AM, a 110 cover, a discount on the premiums. Exactly. There were so many attributes to that program. Otherwise, there are tens of thousands of units that never would have been built in the Canadian marketplace. Like, it was a perfect storm for you to announce that right as interest rates were popping, as costs were going up. Like, it was absolutely great. But I'm curious what the conversation is now inside CMHC. Jeremy Wedgbury, who runs the First National Commercial Group, was just on a panel up there. Yes. He was asked a question. And we've been telling our clients at First National, CMHC is risk off. And we've heard it from people at CMHC that, it was amazing. MLI Select was there to support the Canadians and developers and the need for housing and a need to build apartment buildings. We don't want to be 95% of the marketplace.
Yeah. Well, it's not sustainable, right? Like, I don't think it's sustainable to put 90 to 95, 98 and have it flows the numbers, but it's not healthy, I think, for the Canadian market to have the whole purpose built on the federal balance sheet. Like, that's just not
it's just size of the book is the problem.
I think we need to find other ways to stimulate that liquidity and capital in the market. And on top of that, we're missing. Well, you've heard, obviously, the numbers and the supply gap, and it's humongous. And when you convert that into the capital, it's trillions. And so, we can't.
I'm glad you guys know that.
We cannot solve the supply crisis using CMHC's balance sheet. We'll be a big part of it.
For sure.
Absolutely, we will be a big part of it. But we need to bring other players, and big players like financial institutions that are able to also set aside some capital. So I think it's very important for CMHC to be there in times of crisis, and we will continue to be there. But I think we're still in crisis, but after a while, it has to recalibrate, and we need to find new capital to come into this business. Now, MLI Select was extremely important, continues to be extremely important. As you think about the benefit of MLI Select, you're actually incentivizing affordability, accessibility, and energy efficiency. And so that as an outcome for the country is extremely important, but we also need to find ways to mobilize capital outside of CMHC, or else this whole economy is not working for housing.
Well, what is the right ratio then? If 90% is not the right number, then what would be the right?
I don't know that I have that ratio. I have to
less
say
than 98%,
but it's definitely less than what we have today.
Yeah,
it's hard to tell what the perfect ratio is, and if we can start having that market dynamic, it will calibrate on its own. We've seen that in home ownership. Like, we talked about the history of CMHC. We were 100% doing home ownership at one point, just given the crisis. And eventually it recalibrated on itself. But it's very difficult right now because it's not penciling, and for various reasons, the cost of construction, of course, but there's also a very important capital tax when you're doing new construction for financial institution, right? Like, when you look at the capital requirement to do new construction, it is extremely hard to make that capital work. And so what we're seeing is the financial institutions are keeping capital for other types of business, because new construction for purpose built is risky and requires a lot of capital upfront.
Yeah, and I mean, so where do we want to go from here? Let's start with the equity side, and then we'll go to the debt side, because there's two different types of liquidity in particularly in this topic. And you're right. I mean, the challenge with MLI Select, because it was so good that it's, I mean, I make the comment, it's like crack, right? Like our clients we're hooked on crack, literally, because it was 95% loan to cost, no rental achievement. So the day you get occupancy certificate, you can term out that mortgage.
Originally, the premiums were exceptionally still low, but they
Still
were
low.
exceptionally
Low.
Yes.
And yeah, I mean, the affordability was obviously a requirement. The energy efficiency, a lot of guys were building to that standard anyway. So it was,
especially in BC and Ontario.
yeah. So to meet the social outcome criteria, well, good that they get maintained, wasn't terribly challenging. And you just got, again, having to put 5% equity in to build $100 million building was just fantastic. And often they'd bought the land 15 years ago. So that was literally just a land bump. So there was no cash in the deal. And often, in fact, there was cash out into their pockets before they've even, hit really dug a hole. So it was just such an incredible program. The conventional market couldn't compete, right? Like, and so now you're pulling back, and we totally understand that CMHC is a bit risk off, and they've introduced programs like bonding and rental achievement, and just a bit more conservative, which as a lender we totally agree with. Like, I'll be fair, we were selling that program, but plugging our nose, covering our eyes, just crossing our fingers, hoping nothing went wrong, because it was too aggressive, if I can be a bit blunt. And on the equity side now, and you're saying penciling, because 5% cash in, it penciled. 15% cash in, it doesn't pencil. And that's the difference, right? The dev yield all of a sudden just drops 3 times as much equity required to make the deal work.
Yep.
But just make the deal happen means that the returns don't work. And that's, I think, the challenge we're in right now.
And I think what you're talking about is, we introduced this product in an economic cycle where it was really needed. Interest rate was going up. And I think, as you evolve this product, it's important to recalibrate to the dimension that we're seeing today. And that recalibration needs to take into consideration that we want a competitive market. We want others to be playing in this space. Like, our role as a federal government is to be there when nobody else is there, right? And so how do we the question becomes is that calibration of this product, acknowledging that we are subsidizing some important social outcomes, right? And so where I was going with that is, I think slowly we're seeing certain market recalibrating to a form of affordability. Our economists will certainly say that. But when you look at Toronto and Vancouver, we're not out of it. And so when you're talking about penciling, I think we have to be careful, because housing is extremely local. And it all depends on where you are in Canada in order to be able to discuss penciling, because it may be penciling right now in example.
Halifax, Ottawa,
Exactly,
the Prairies,
right?
Calgary, Edmonton, it is penciling there, but I mean, where we need the housing the most, it's not. Okay, so you went there. I was going to avoid this topic, but you've gone
Toronto,
there.
Vancouver,
yeah,
being
because
special,
so CMHC is a federal government. You obviously have a responsibility for housing for Canadians. We know that particularly the MLI Select program and the affordability thresholds, using the 2019 affordability census data, doesn't work in Toronto and Vancouver.
When is it updating?
Well, is there a world where you say, okay, you know
heard
what,
this.
in Toronto and Vancouver only, we will change the thresholds to incent development just in those two cities?
Yeah.
And how do you balance that? Because obviously everyone else is going to yell and scream that
It's a fantastic
favoritism.
question. So, if I put my policy hat on for
Yeah.
a second, housing is extremely local. And, when you're putting out policy, whether it's programs or commercial, that's the perfect tension of trying to figure out, are you going to be local or national? And so I right now our MLI commercial product, the message is status quo, but that's always a question that we struggle. On home ownership, we're national, right? But there is some differences on the borrowers, but we are playing nationally. On MLI Select, we are seeing markets easing. And so this is a perfect question that we are asking ourselves. Also on the program side, because the government's providing a subsidy And so it's a question for the government where that subsidy needs to go in times of crisis.
I was at the multi-lender working committee last week, which is a semi-annual sort of conference that CMHC hosts with all of the sort of the largest lenders of benefactors of your insurance. And one of your economists put up the stats, and it showed the condo supply dropping drastically. And then the next slide showed apartment development sort of up above average, above the 10-year average. But there were more apartments being built in Edmonton, Calgary, and Montreal than there were being in Toronto and Vancouver. And of course, that drastic drop, like almost like straight line down condo supply, exclusively impacts Toronto and Vancouver. So we've got this condo, I don't know.
Well, it's a shadow market of rental, right?
And so you got no condos being built, and we're not building apartments in Toronto and Vancouver, right? So it really is, it's going to get amplified. I'm calling out that you're going to see even increased challenge affordability.
3 years from now, when there's no shadow market,
and there's no rental supporting the back of the condo, and it's going to be heightened in these two markets.
That 3-year mark is something we need to watch, because that's what our pipeline is lagging. Right. So right now, when I say pipeline, our volume of business that's coming in, both on the commercial and housing program, so ACLP, right now the volumes are through the roof. But what we're getting is 3 years, those of them that like
it starts you should be looking at, not under construction,
not the financing.
Yeah, there are no condo starts.
And so the volume we're seeing today is like from 3 years ago, and we know that the market was on fire 3 years ago, right? And so in 3 years we're anticipating this kind of decrease, but what we're trying to do is, how do you not get to that decrease collectively as a country, because we can't afford it, right? And so
particularly the two largest cities, two most populous cities.
Exactly.
Nadine, I feel like I'd be remiss if I didn't bring up two items that my clients constantly mention to me: CMHC timelines and the recent rental achievement change.
Yeah.
Everybody loves the CMHC program; they all want to use it, which is great.
People love complaining about CMHC
but then
too.
They go, hey, it could be better. It's like, well, okay, but it's still great. But if you address both of those, that would be good. I mean, CMHC timelines have been a bit of accordion over the last 5 years. Sometimes lightning quick, sometimes it can take months. And some of those are driven by policy changes. So you're going to have natural clustering of submissions around those policies. Yeah. But how much does CMHC think about the timelines? Because it does make it it's difficult when it is in a longer cycle to have purchase transactions in particular get difficult, and construction start times start to get delayed.
We hear that feedback all the time, and so thank you for raising. And certainly we have a metric inside of CMHC, 30 to 60 days. And right now we're meeting these thresholds. But you're right. There's time.
Today you guys are fantastic. I honestly, I'll tell you, it really depended on the quality of the deal, the size of the deal, and
so
but
construction versus
we have every week we have a deal that goes in on a Monday, and we get the certificate on Thursday. there is 3 day turnaround. Yeah. So it does happen.
That's good.
Now there are some that take 3 months, but that's probably because they're very complex and they have issues. But anyway, just today you guys are doing great.
Well, thank you. And yeah, I mean, we are meeting our standards, but there are times where you'll see a bit of the delays, and this is due when we're seeing volume changes, the market is reacting to perhaps some policy changes, and so what we're trying, we're always looking at our process, we're always looking at our capacity and workforce to try to predict those kind of volume ins and outs, and making sure that we're on top of those volumes. But what I want to say is, CMHC has been doing over 500,000 units, whether it's repairs, acquisition, financing, a year. And so when you put that all together, we are there, we are present, and we are turning these deals around as fast as we can. But you're right, when you see the delays, it's either due to complexity. So I can tell you right now, multi-unit financing is complex. Sometimes we'll see up to 7 to 10 partners on certain deals. And so who goes on first? And trying to figure out those either loan agreements or certification of insurance, it is complex. Other times it's volumes. And so you talked about policy change. I think what we're hearing from our clients is, how can we be more transparent about some of these policy change? They will happen. They absolutely will happen, because we have financing tools. We have to adapt them to the current economics of purpose-built. And so as they are changing, how can we be more transparent so that we can work with our client to understand these changes, why we're making them, allow them to adjust to them, because it's hard when you're making change and then pro forma's changing at the same time, and they've been investing into certain projects for the past 2 years, and all of a sudden,
at the same time, you can't,
you know, all of a sudden
policy
it's
changes,
changed,
but at the same time,
and
you
then you're
can't,
not
you can't
penciling.
telegraph. You can't telegraph because
Right?
then you get these floods, right? Like, I
So
mean,
we
let's
hear
be,
you.
let's
We-
be
yeah.
transparent. Like the reason there was that significant delay about twice, I guess, last year,
Yes.
June,
Yeah, the
2 years,
environmental
Policy
was,
change.
Yeah.
was because they announced a policy change, and then we, the lenders and the community, flooded you guys with
Yep.
tens of
Yeah.
thousands and thousands of applications.
Well, the other big flood too was when the bonds went to
Yes.
near zero in early COVID. Big flood of applications. The obvious reason that was the lowest interest rates that had existed in quite a long time. That's something out of your control in terms of timing and planning and orchestrating. That's having to respond to external factors.
Yeah, and so training underwriters, not easy. We're competing in the market for underwriters, and so there are all these factors. But we just wanted to leave with CMHC. We hear our clients, and we're constantly reviewing our processes and our turnaround time. And I can tell you, I'm pretty proud of this organization delivering what we're delivering a year. In terms of both funding and units, it's pretty impressive.
It is. And unless, again, you're 98% of the marketplace, and you are because the attributes of the program are so fantastic. So I think it's, if you don't want to wait, then go take a conventional deal, right? I think is probably the answer. And to be fair, there's no waiting anymore. You guys are right back on top of it. Let's
rental achievement before we
Oh,
go.
yeah,
That's
sorry,
the
go.
one. Yeah. So just for anybody who's not totally up to speed, under the MLS Select program, you can theoretically do 95% LTC financing, and people were doing that for a long time. The more recent tweak to that program is that you can still get 95 if it underwrites to that. Not that they all do, but theoretically 95. But during construction, you only get 75%. And then once leased up, you're now get there's a second tranche bringing you up to your full underwritten loan amount. But for larger projects, if you're 3 or 4 year build and an 18-month lease up, it could be 5 years plus before you get it back. Yeah, and your equity requirement just 5x'd over that time frame. In the most extreme examples, again, most properties don't underwrite to a 95, but some do. What triggered that change at CMHC?
Well, I talked earlier about the need to always, look at, because we're a financial crown, and financial crowns are required to constantly look at their offering to make sure we're calibrated based on the risks. And so when you look at the capital requirements on new construction, there's a lot of risk tied to that stability period. And so, we calibrate our product to the risk, and though that's what you're seeing in terms of that change, but we understand that it is making a difference. And so we appreciate the feedback. We always appreciate the feedback, and we'll continue to look at that. But underlying that, we remain a commercial program. We compete, and we don't want to compete with conventional. Like, that's not our purpose. And so how do we calibrate these programs to make sure we're getting the right social outcome for the risk that the government is paying from their balance sheet without overcrowding conventional? That's kind of the objective of today.
Well,
so you're raising AGI. That's one of the elements. Right?
I'm always very hesitant to say this, but I will. Funding at occupancy was a terrible idea. Like, that was just I'm sorry, that was just a bad program. It never should have been announced. Never
permit.
never should have been. Like, rental achievement is absolutely the right way to go. The only comment I would make is perhaps if some deals don't need to go all the way down to 75% loan to cost, some could be 80, some could be 85, depending on, like, if they're saying they're going to rent at $3 and the market is 3.5, like, rental achievement should be less than all the way down to 75. But we are big proponents of 75%. And to be fair, or rental achievement. To be fair, even when you guys were not applying rental achievement, we were, because we just weren't comfortable with the math
On some files.
On some files, yeah. Like, it's
a function of
so
of
we
the
are
risk.
100% supportive. I just think sometimes, clients used to 95%, all of a sudden your rental achievement, so it's 75, like that 20% equity requirement. We talked about the math and things not penciling.
Well, and to be fair, it's not going on all files. CMHC's not universally applying it. There is cases where it's not being applied, and what you're saying is if the underwriting makes more sense, then it makes
absolutely
less sense.
It's a function of underwriting, right? That's what it is. And so it depends on the risk of the file, depends on the borrower, depends on the market. Depends on the social outcomes.
We're almost out of time, so let's segue into sort of more the future of Canadian policy and what sort of the solutions we think are coming. I want to kind of do this. So the mortgage insurance capital adequacy test came out about 8 months ago, which is an OSFI thing, which has a section about multifamily mortgage insurers and their requirement of capital. Has that had any impact on the way that you guys are perceiving the business and the plan you're making going forward?
Well, it is part of how we risk our products and how we define kind of how the eligibility, the requirements. So yes, the what we call the MICAT. So OSFI came out with a capital regulatory framework on our commercial business, and we are very grateful to have OSFI because again, we're in the market with financial institution. We are financial crown. We should be on top of and behaving the same way, right?
We welcome audits just like everybody else.
Absolutely,
right?
we do.
Yeah. You are an auditor.
I'm an auditor. I gotta. But what that brings is certainly calibration because that MICAT is very similar to the CAR to financial institutions. So you're definitely calibrating your products as a function of your capital. And by definition of a financial crown, you need to return a certain profit to the federal government. And so, 1 + 1 = 2. So when you're introducing capital requirements, CMHC, for all good reasons, has to set aside that capital to make sure that it's there when times of crisis.
Yeah.
Now, we haven't seen any defaults or major defaults on the purpose built. Most of our books is under construction, I'll have to say, but that capital is extremely important for two things: default and hardship in terms of crisis, but also continuing business.
Yeah, of course.
And we need to continue that business, right? So, very grateful for OSFI's presence in our world, but yes, it is changing the dynamic.
And so, on those new policies, and let's maybe just talk about some of the creativity. And I can go to one in particular because I don't want to run out of time and forget about it. There's been a lot of discussion around modular.
Yes.
Building and financing modular construction. I know CMHC's got a pilot project, and just very, very quickly, effectively, if the manufacturer can acquire performance bonding for that contract between the manufacturer and the developer, then CMHC will finance up to the percentage of that bonding. So I think it's a great program, and I'm saying this because and if you're thinking about modular, there is a way to finance it now through CMHC. Approach your local First National rep. We've done a bunch of them, and we are the experts in modular financing to date. The challenge we have is that there are no manufacturers. What do you think about that?
Yeah, I think modular and prefab is like the chicken and the egg type of story, right? Like you have to stimulate the demand and the supply will kind of adjust. So it's very hard to start with the supply side because who's going to invest in this kind of industry if we're not able to stimulate that demand? And so that's kind of the challenge with prefab and modular. That said, CMHC through its housing program has done a lot of modular, especially for like transitional housing, shelters.
That's the only market that has existed to date, right?
We've seen it in rural. We've seen it in the north as well, for different purpose. And we do it in ACLP. So we've seen different markets for it, but they're extremely, extremely tiny. We've seen a few manufacturers open up, but very hard to do business because that demand is not there. So the question becomes like, how do you kind of fuel that demand? Because I think the market is ready.
Yeah.
Right, but you need that demand in order for manufacturing to continue that.
Yeah, well, here's the
right?
shout out. We've got the program, we've got the product.
We're ready.
Yeah, CMHC and First National. We've worked very hard at finding a way to make it structured. And so we've got a couple of active private developers, private manufacturers, and finance through CMHC, and they're going very successfully. And it's a product that does work because it's 3 months, literally 3 months development time.
What we're seeing in our books is speed, affordability, and that universal accessibility standards, easier to achieve, is what we're seeing on the ones that we've done more recently.
From
right?
signing the contract with the manufacturer to tenants in occupancy cash flowing is 6 months.
But you got to create all the right conditions in order for this market to scale. And I think, I'm super glad that this federal government is committing to that, because that's one of their biggest commitment. One of the biggest commitment for our housing is that transformation. and how do we, promote innovative construction techniques, including modular. So, we're trying to innovate in our financing as well. You've mentioned the commercial side, but same on the housing program side.
Yeah, I will admit I was speaking to people, 3 years ago who were looking at modular, who ultimately abandoned it in favor of doing traditional build. So the time wasn't right. Financing being only a piece of the puzzle, why it wasn't going through.
Was it fixed? Yeah, no, there is a solution now. You heard it.
It does feel like this is the next stage where it is viable, rather than to just talk about it, could actually, get it going.
Yeah, exactly. Agree.
What else? What other cool creative sort of solutions are there out there?
We talked about the innovative techniques to construction. Like we've talked about modular, prefab, robotic, just thinking about other ways to do construction, but also, supporting current construction, very critical. My biggest worry is that we kind of pause and stall in building that supply. So that's like my first priority. How do we not like stall and continue that supply? But I think the two other question is innovative financing. We've been doing great on lending, very important, continues to be very important. But we've seen other countries, community bonds, patient capital, joint ventures. I think it's about partnership. And in that partnership, how do you incentivize different structure of financing is going to be very important to grow and scale, in my humble opinion, including lending. So we've been testing out a few models with our innovation fund. We've seen some pretty cool partnership and different types of financing models. And I think that we need to think creatively on the way we attract and move capital, including foreign capital, to be honest. Like we need investors to invest in Canada on housing. And so that's going to be important moving forward. And like I said, like just keeping an eye on that supply so that it doesn't stop. And I know it's really hard right now.
I was going to ask a question, what keeps you up at night, but I think you just answered.
For sure. That 3-year mark is on my mind. Like we're seeing huge volume right now coming into CMHC, but I worry about what's going on the start side. And we're hearing it from developers right now. It's not penciling. That yield curve, it's too high. That ROC is too low. And so we're kind of pausing, but we can't be pausing. And so what do we do?
Last comment. Right? I know what do we do? We should probably have a part 2 and just have you back next time because I got more. But you got a new government. You've got new Minister of Housing, new Minister of Finance, obviously a new Prime Minister. They have their own probably beliefs and expectations. How does that interaction work? Like you've been in CMHC for 20 years. Like you guys are the experts. Now you've got this new government coming in. Obviously you have ideas. What does the interrelationship look like? How do you get aligned?
Because you work through a few different prime ministers at this point, right? It's over 20 years.
And Minister of Housing. Yeah. Well, I think it's exciting because housing continues to be one of the government's priority, and I think lots of commitments around housing, right? Like we've seen like commitments around HST. They've even mentioned like development, the public lands. Like there is a lot and I think it's good because there's not one solution to this housing crisis. I think it's multi-dimensional. You have to look at various things to bring the cost down, and we heard a lot of that in the government's commitment. And CMHC being the expert for the past 70 years, we don't shy away from providing advice. And I hope it's helpful to the government. But we've been providing all kinds of advice from both our economics, research, insight, but also what we're seeing and hearing from developers on the ground, non-for-profit. We have over 10,000 clients at CMHC, and so we're hearing a whole lot on what's working, what's not. And so we're providing constant advice to the government through our lead department, Infrastructure Canada. And so, and they're I think they're very welcoming advice, to be honest, because we need to find those solutions. And I do think CMHC is going to be, CMHC is going to be part of it. We're, like I mentioned, we're the biggest funder of housing right now, and we need to find others to come to the table. But I hope that, I do think that CMHC will play a big role moving forward, and I'm very excited about that.
It's a message to you, Aaron. We got to find alternate capital sources at First National. Spread it around. But I'll leave that to you.
You got it.
Nadine, we've taken too much of your time at this point. We appreciate you going the extra distance with here. I think we're at the 45-minute mark, and we promised
I got 15 more questions too. I'm sorry.
We'll have to read in Aaron for a minute. Yeah, of course, we want to thank First National for powering the podcast. The Real Estate Forums are hosting us here today at the Land and Development Conference. But most of all, Nadine, that was enlightening, and I really enjoyed it. Thank you for joining us today.
Well, thanks for having me. This was fun. Thank you.